We will now start panel discussion 2. I'd like to ask the panelists to come up onto the stage. Let's greet them with a big round of applause. So now you're all on stage. So I would like to ask Mr. Shinya TSUJIMOTO, Representative Director of Kashiwa Research Institute, to moderate the session. Mr. TSUJIMOTO, please. Thank you very much. I'm TSUJIMOTO from Kashiwa Research Institute. I will serve as the moderator. Today's theme is about EMP. So we have EMs and asset owners, and we'd like to have a discussion. EMP starting to take root and spread, but I think the situation is that not much investment has actually been made. So let's look at the current status and the future outlook. So first, I'd like to ask each of the panelists to do a self-introduction and also talk about their involvement in EMP. So Une-san, please. Thank you. I'm with Investment Lab. I am the head of that company. My name is Une. So I think I represent the EMs. I think that's why I've been invited today. Amongst the EMs, I'm not outstanding, but so I don't know why I was invited. But 2 years ago, I was chosen for the showcase as an EM. So I probably want to hear what has happened since. So that's what I'd like to talk about. So as a self-introduction, I used to be a proprietary trader for about 15 years at a securities company. And then after that, I worked for Japan Post Bank market investment department. So I worked as an asset owner. So I was working with passion as an asset owner, and asset management industry I wanted to promote, and I wanted to do it myself. So I established the Investment Lab, an independent company. So I want to make the whole of Japan better at investing. So alternative fund investment I am doing for listed Japanese equity. I also do venture capital. So we have those, I wear those two hats. So we have those two businesses. And thanks to your support, we're gradually growing. And so AUM of 100 billion is coming closer, approaching. So it's been a tough journey starting from scratch, but here we are. And I'd like to explain that journey to you as well. So from asset owner side, we have two speakers. Haruna-san, please. I'm Haruna from Japan Post Insurance. I don't have a self-introduction slide. I graduated university in 91, and for some time I was with Norin Chukin till around 2005 doing asset management, and from then I was in the Sumitomo Mitsui Group asset management, and in 2016 I went to the Japan Post Group, and I've been in charge of investment management since then. And I also have the honor of serving as a FinCity.Tokyo board member, and also I am a member of the selection committee for the showcase. So I'm in the discussions, and so I think maybe that's why I was invited to speak. Une-san, I have a long relationship since Japan Post days. So looking at the emerging managers, how they become independent from another organization, and they create their own world. So I've been watching him do that for many years, and I've been supporting him. So maybe it's difficult to talk broadly about the EM, but I can talk about what we're doing at the Japan Post Insurance. Thank you for this opportunity. Thank you. Finally, Hata-san, please. Greetings. I'm with JIC, Japan Investment Corporation. My name is HATA. So this is a session about the EMP. So we're here to talk about that. So we really wasn't focused on EMP, but it turns out that we have formed various relationships with emerging managers. I'd like to talk about that experience, where we look at in selecting them. Myself, I have been in the private equity, private asset world more than 20 years. And in terms of LP investment, I've been doing that for more than 20 years. That's how and where I built my career. So previously, I was at the Nisei Asset doing PE investment, co-head of the PE investment there. And then before that, I was at the Nomura Asset. So for about 9 years, I was doing emerging market like China, India, rapidly growing markets. So I was the emerging market manager. So I wanted to bring that knowledge and expertise to Japan, and so I lead the effort at the JIC. So JIC, let me briefly explain the entity. Currently, we have 53 funds, private funds that we invest in. So in 2020 July, I got on board and started investment, and so that includes 50 funds for VCs and 3 PEs and others. So our investment is focused on VCs. And right-hand side, JIC also conducts direct investment. So we have JIC Capital that does a buyout, and then we have the VGI, Venture Growth Stage Subsidiary. So in my line, I support the subsidiaries and also support the private fund investment as well. So I'm happy to be here. Thank you very much. So let's talk about the first topic, which is the current situation. So Une-san, what has been the difficulties that you have experienced? So focus on that and talk about what you've been doing. A lot of difficulties I have experienced. So I was with the Japan Post Group, and I worked together with HARUNA-san in those days. And in the Japan Post Group, I was engaged in the market investment department reform. And the final agenda was, as asset owner, you want to grow the investment industry, and that will benefit the whole of Japanese economy. So 8-9 years ago, I volunteered to be an emerging manager, and that was almost successful, but it wasn't. And the Tokyo Metropolitan Government, I was trying to work with them, and they were quite upset. I still feel sorry for that failure. But compared to then, the thinking about emerging managers, understanding about emerging managers has been much improved. And so I think that the environment has developed much better. I'm not saying we're very successful, but we have been able to earn enough to go on. And so this environment where new managers are emerging I think it's wonderful. So this experience we wanted to share to vitalize the entire market. So when emerging managers, well, we're emerging managers ourselves, but the newer managers, they come to us asking for information, and we're very happy to oblige, and we talk to them what has been difficult, what has been challenging. And what's challenging is how to build up the organization, how to get the people, how to get the licensing. But the most difficult is, of course, fundraising. So when you fundraise, what is your strengths? So you have to face yourself, and you have to think, what is your competitive advantage? And you have to question yourself, can you actually establish a fund? You have to go through that thought process. So when I was in the asset owner side, so Une and HARUNA, so as asset manager and owner, there was a conference we discussed how should managers be, and I think the conclusion was that the problem is that the asset owners don't provide the funding. But now I feel that it's the asset managers. It's their fault. They have to have more literacy. Haruna-san and Hata-san, they're actually putting in the investment. And so we have to be able to respond to that and deliver. And we have to set up the organization. We have to make clear what our competitiveness is. That is the difficult part, but we have to do that so that we heighten each other.
And I said earlier that we are performing rather well, but I have to say that I could not live up to the expectation of Une-san or others, and still we are trying to improve ourselves with the support from those from both within and outside. And fundraising, that's the most challenging, and we had the fund made available from overseas, but now the situation is improving with the asset owners offering their asset to us as well. So through collaboration, we'd like to further promote the business. Sorry for talking too long, but that's the most difficult part that I experienced in my career. Next, on the part of the asset owners, what is your understanding about the current situation, reality, especially in the case of JP Insurance? I think you're engaged in a very unique initiative. So, Haruna-san, please. Yes. I think the Une-san was accusing me, but I don't mean that I gave a low score to the evaluation of the Une-san. We have 60 trillion yen as a total asset since around 2016. We have engaged in investment, and through that, alternative assets are the ones that we also started to place some focus on. In fact, that will be on the order of trillion yen in the investment. And also for traditional assets, active managers have been used as well. Traditionally, talking about EM, in fact, they tend to produce a very good performance in early stage. And if we look at the capacity, then I would say that it is not the bad decision to make an investment into EM. However, in reality, how can we allocate the fund out of JP? We can't afford to make an investment on the order of tens of billions of yen, and therefore, given the asset volume that we can make an invest and the preparation that would be required, then I would say that there are some hurdles that we have to overcome in making a decision for investment. But since several years ago, to make Japan as a leading investment center has been advocated, and the FinCity.Tokyo has been promoting various activities, and therefore the manager database or list, to be exact, has been developed in the process. And then we started to wonder how we can make use of that as a part of the investment. And it so happened that we thought we finally came to such an opportunity that is on the part of the government. They made such an initiative, and we thought it was significant to work with them. So in 2024, we decided the policy to work with EMP. The 300 billion yen by 2028, that's the amount that we commit. Doesn't mean that we would use all of that, but and also about year 2028, whether that's a fixed year, it may not be. The point that I'd like to make is that we are prepared to make that much allocation, demonstrating our interest in promoting EMs, and maybe that that would facilitate the flow of the fund from the JP Insurance, and that is how we started such initiatives. Then exactly what kind of activities? I would say that the relationship with EMs, including the database availability, that was a major bottleneck. And furthermore, how we can monitor or follow up the monitoring, that's going to be a long term because exit will be sometime in the distant future, and therefore as a part of that, the FinCity.Tokyo sponsors EM Showcase. I'm not here to advertise that, but it is under certain conditions, FinCity.Tokyo or Tokyo Metropolitan Government conducted a screening of emerging managers and then present the showcase. And we thought that's one universe that we can make an investment in. For now, the size of the investment would be about 10 billion, or on the order of 10 billion. And as I said earlier, the supervision that's required, and therefore, about the same time, together with Daiwa Securities, we came into agreement to make an investment into Daiwa Asset Management. And within Daiwa Securities Group, including due diligence of the funds, they have accumulated the expertise at Daiwa Fund Consulting, mainly centering around long-only traditional type of assets. And together with them, we created a scheme where Daiwa Asset Management acts as a gatekeeper, and we offer some funding. Of course, it doesn't mean that we will leave everything to Daiwa Fund Consulting and Daiwa Asset Management. As an asset owner, we make a certain level of commitment, including the dialogue, communication, in making a decision investment right now. Within this program, the three companies are the ones that we are making an investment in, and we are willing to expand this program. And we expect that there will be more and more managers to be put into FinCity.Tokyo list, and therefore we believe there is a room for further growth. On the other hand, talking about One-san, as I said earlier, this is mainly the long-only managers program, but aside from that, PE, hedge fund, and other alternative asset-related program is going to be launched sometime later this year, so that with those two vehicles, we'd like to make such an investment scheme through collaboration with Daiwa Asset Management. Rather than the significance of such the initiative, as an asset owner in making an investment efficiency, as well as the deep the monitoring to be performed. With that in mind, through collaboration with Daiwa Asset Management and Daiwa Fund Consulting, we're trying to complement factors that we are lacking. So that's how we are currently engaged in such an action. As EM, this is quite promising. We hold much expectation towards such a program. Now, HATA-san, in your case, I would say that that's one ideal form of EMP. So if you can refer to that, thank you. Can I have a slide? Haruna-san mentioned like 300 billion yen. In our case, it's 283.6 billion yen over 5 years, because it was VCs, and therefore the shot size was rather small, and therefore it took rather long time to come up to this level. Une-san mentioned the GPs and emerging managers are faced with difficulties, but so are the LPs. That's our impression based upon 5-year experience. With this slide, I'd like to explain about how the allocation has been made so far. In that case, based upon the industrial competitive enhancement law, as a part of the mission, we are making an investment, and therefore, rather than running EMPs, I would say we are interested in creating startup ecosystem in Japan so that the the industries of next generation are developed originating from Japan, and as a result, we made an allocation on the such emerging fund. Not only VCs but also engagement funds are now receiving our allocation. So there's broader scope of point of view rather than just the VCs. We are making a selection of managers and also selecting strategies. And the 1/4 of the fund, the fund it turned out to be the number 4 fund. In fact, by the time of Fund 4, it could be no longer called as emerging managers, but I would say that the ecosystem is yet to be fully developed. And at the time of the number 3, the number 1 track record was not available.
In VC, it becomes more long-term capital investment. So then as an LP investment, how do we look at the track record of emerging managers or any alternative way to assess the potential of the managers? That's a big headache for us. As institutional investors, we have been making allocation based on the track record. So managers who have a long track record, we can crunch the numbers and we can do the attribution analysis, but those things are unknown. So we have to look at the individuals of the GPs, the background, the experience. Maybe they come from consulting, maybe they're entrepreneurs, maybe they have experience in asset management. So how do we make a comprehensive evaluation and how do we assess the strategy of the GPs? And we have to qualitatively evaluate the managers to see whether they can make a contribution. So that was a difficult part. It wasn't really hard. It was just difficult. And JIC has done this for 5 years. We have been accumulating know-how. And we're hiring young people. They're mostly from institutional investors. So they have only had the experience of communicating with established managers and an analysis of the established players. So don't rely too much on your experience, we say. We're creating a manual to help them to assess the potential of the emerging managers so that they may communicate better with them. And one more thing that we have had the difficulty with, that is post-investment. So there's a pitch, and then we listen to the presentation, we do the evaluation, and both sides are painting a rosy picture of how well the strategy will work. I mean, you have to have that rosy picture to bet on that and to actually put in the funds, but actually things don't necessarily go as planned. It's not just about performance. In the world of evaluating asset managers, what I always say to GPs is you each have individual track records, and that would be like as a capitalist, IPO or exit, and for a buyout as a investment professional, what is that track record? So there is that track record, but if you become an emerging manager, if you create a new firm, you become top management of a new company, and that's where they lack experience. So for the first time, they're doing something other than investment management. They have to do the operation of the company. They have to communicate with investors. They have to build teams. So that's the work of the management. And the fund managers that we communicate with, they in many cases lack that experience and that viewpoint. So as a risk, that's something that we have to swallow. I mean, if there's a manager who have all that experience, they will not be emerging managers. So we have to have the assumption that they are still immature. And of course, we're investors, but we have to have engagement as a partner. We have to support these GPs as LPs. That's what we have to do as part of engagement. But in our daily work, we're facing situations that we had not expected or we had not heard about. So there are those issues that emerge, and then we work closely together with the GPs so that we resolve them so that they can move on to Fund 2 and 3. So that's how we need to run the program. That's what I feel after doing this 3 to 5 years. Thank you. Let's move on to the next topic about the future of EMP. So from EM perspective, Une-san, can you comment on that? And also talk about your expectations for LPs, asset owners. Thank you. So the future of EMP. I mean, I think things are becoming very active, so it's still tough to do fundraising. But listening to HARUNA-san and HATA-san's talk, I really feel that we have been nurtured by these people. I mean, I did that kind of work myself when I was an asset owner, but now I'm an asset manager, and I feel that I am being supported and nurtured by these people. So it's very encouraging what they are doing. In my case, I'm lucky that we got funds from overseas sovereign wealth funds, and also from global fund of funds. We received quite a sum, and we're able to grow. And also we have regional banks and securities companies domestically who invest in us as well. So talking with these LPs, I mean, in many cases it's the overseas investors that we interact with. And they look at us as independent managers. They treat us as business partners. And once every 3 or 4 months, they come to meet us, come to see us. And during that time, we have 3 or 4 hour meetings each time. As they ask, how's your family? They ask about my mental state. And they ask, why did you think this talk was good? How did you get to know about this? So they ask all these questions. They don't talk too much about performance. Our way of thinking, our logic is what they try to explore. And through the back and forth, I think they're helping us to grow. So this EMP program, manager and asset owners have to have the relationship of trust. And I really feel this after becoming a manager myself. We must not be overconfident. We must be humble. But also, you have to clearly state what you are doing. There's so many things. And I hope that asset owners will understand all the things we are doing. So manager side, of course, have to make great effort for further development of the EMP. So I want to support other funds as well. Of course, to be careful about conflict of interest. So recently, I work with other funds. I support other funds in different fields, mostly for free. And sometimes they're saying they want to raise funds. So I refer them to asset owners. I bring them to interviews with them. And I felt in the world of VCs, when you talk to asset owner, then they would say, you don't have a track record, so you should have built experience. Now, if in a contents field, we have this edgy operator who has experience in that field, and we're helping because they don't have the financial experience. So I refer these investors to them. They say, we're on board right now. And so I think that in my work, I have not accumulated enough in my work as a venture capitalist. Asset owners, they would be interested and come on board if they think it's good. So asset managers, they have to have the skill. They have to be able to verbalize. And if they feel it's not a good match, they should withdraw. So emerging managers, it's not enough just to have new ones. There should be integration, like future Blackstone. Those things have to emerge from Japan. So we should not just have a large number of small ones. And there should be mergers and collaborations so that resources in Japan can come together. So sometimes, or in many cases, I'm supporting the other funds. So the second, third chapters, there should be more effort by the managers, and there should be consolidation amongst them. And I hope that will invigorate the market in Japan. That was very interesting. So consolidation and helping each other, I think those are new perspectives, new ideas. So now let's hear from the asset owners. So I want to ask Haruna-san, talk about the future of EMP, please.
Thank you. That's a very difficult question to answer, but I'd like to share with you my thoughts. First, for EM to be vitalized, the asset management business itself has to be attractive. Personally, aside from EM, asset management business in Japan is associated with such a low fee, so that unless it is the alternative, if it is a traditional asset, and then the fee level is at such so that it is hard for new emerging managers to come in, because that will require extra energy. As Hata-san stated, in the case of the hedge fund startups in overseas, even with the very qualified managers, they have to spend a lot of time for collecting the resources, the capital, and therefore I would say that the asset management business fee itself has to be revised, and asset management business has to be profitable to begin with. That has to be the very basic assumption. Then on top of that, from asset owners' point of view, there are various issues that have to be addressed. For instance, in the case of EMP, they cannot work within the existing investment framework. We have investment guideline for outsourcing. For instance, a 3-year or longer track record. So with that condition, EMs cannot join. But if we look into that more in depth, what are we looking at? The business due diligence will be performed in the case of the equity, and if it is the fixed income, then that will be coupon. And then what is the source of the return for the fund? That's actually the challenge. The human resources, which are hard to be visualized, and as a way to visualize that, track record is included as a requirement. Therefore, for the in decision-making process of the institutional investors, it is not bad that the track record is included, but if it results in a barrier for the EM to join, and then we have to remove that condition, then what can we do? Eventually, it ends up with that particular manager's the entire personality, including the track record in the previous careers, because I believe asset manager is the holistic the view that will be required for that the manager. And in Japan, the reference to check the past track record is rather difficult to perform compared to overseas. So ideally, as in overseas, the spin-off from major investment banks and others are there, or asset management companies. Suppose that the top portfolio manager spin off from the asset management company, and if he starts up a new company, and then he should be supported duly, so that the alpha that could be visualized could be presented, so that the financial institutional investors would be presented with those numbers, thanks to the support by the asset management company that he or she used to work for. And with that, that may put extra help and supporting them. And there are various other issues as well, but for now, that would be of the primary importance. Thank you. From asset owner's point of view, I didn't expect that he would refer to a fee, and therefore, I'm sure many asset owners are encouraged to hear that. And there may be those that want to spin off out of the major asset management companies. Those people might have been also encouraged. Now, Hata-san, if you can talk about the future outlook. Yes, thank you. The Haruna-san referred to a spin-off, and in fact, this morning I received one email that's about a spin-off. I believe such an interest is rising. Especially younger people than my generation are the ones that are interested in becoming independent. Want to start fund management business. I believe there are increasing number of young people who are interested in starting the fund management business. Back in time when I was involved in the alternative investment, back then it was just the part of the entire project, and therefore it was not much highlighted. But nowadays, alternative investment is the universe that many young people hold a great expectation to, and therefore we see more young people who are willing to join there. And also, though gradually we are seeing female founders as well to start up their own businesses, which is quite encouraging. And as Haruna-san mentioned earlier, the LPs, those making an investment like us are there, have to consider long-term support, and then at the same time, together with the EMs, the new strategies or the new management style are the ones that we are expected to create and develop. And I have a great expectation to that. I mentioned earlier about the email that I received this morning. The LP is looking at the market from bird's eye view. In fact, in general, LPs are interested in global market as well. For instance, there is such a new development in US and in Europe. Why is that such new strategy approach is yet to be developed in Japan, for instance? But for us, what we expect from the EMs is that, of course, when you spin off, then a track record that will be associated with you, and therefore such past practice may be always there, but I want them to be out of box in their ideas and the fund management. AI, for instance, that's a keyword. As I am looking at the Japanese market and the nexus or connectivity between Japan and the international market, that's where I expect. And is it just the Japanese managers only? In fact, we hear about the impact of the China decoupling, and as a result, more and more Chinese people are coming into Japan, together with European people who find that Japan is a country the good country to live, and therefore they are interested in making an investment. Therefore, the cross-border, this is going to be the key point for Japanese local managers. If they can compete with their global peers, then within the one same asset class, not only Japanese managers, but also the managers with a global perspective could be involved. That's a kind of expectation that I have, and looking forward to the new development. Thank you. We are running short of time, and therefore, from three of you, I'd like to ask you for the key message from EM to EM or LP, or from LP to EM or to the LPs. If you have any message, hope that you can limit that to 2 minutes per person. So starting from Une-san, please. Yes, I will be brief. First, to the peers, colleagues of the fund, let's work together to promote this market. And the expertise, experience that I can share with you, I'm willing to share that with you. And to LPs, we are still immature, especially the venture capital business is yet to make a major success. We need to learn a lot and have to improve ourselves. the hedge fund business in 2023, as a reference, every month, well, we made a win, but then in 2024 we could no longer win. So looking at that, about 18 months ago, I thought maybe we should give up. Maybe TOB, the management buyout, such events took place during that year, and therefore there were many TOBs that were encouraged, and therefore that we could not cope up with such a new development in the market. Therefore, we increased the number of factors from 8 to 80, and then tried to turn the PDCA. I had a coaching session, one-on-one meeting with each manager that helped improving the performance, or at least stabilize that. For the manager, the initial year, well, if you can make a big the achievement, like in the case of Shohei Ohtani, that would be wonderful. But we're not the case, and therefore, finally, a performance has been stabilized, and therefore, to LPs, you might be impressed with particular outstanding performance, but there are those that are trying to steadily improving their capability. So there could be different types, and hope that you will look at those different types of the managers as well.
Thank you. Haruna-san, please. Second slide of my deck. As I said, we're working with Daiwa Asset Management and Daiwa Fund Consulting. We have a program together with them, and we're investing in 3 managers. They're all long only. They're coming out of the showcase of FinCity.Tokyo. And more than we thought, the candidate for long only was limited to the extent that we know. And so we would appreciate if there would be more emerging managers that will be started, so that we can diversify within our portfolio. That is our wish. And there will be several hurdles and administrative part as well. How to resolve that is a different perspective. Maybe there are some tax issues. But one thing I can say is we on the asset owner side, we have some hurdles about investment. Some established thinking that we need to remove, and if possible, myself included, maybe in the network of investors, to vitalize capital market, how to share our knowledge, I think is a major issue, and I hope that I can do that together with you. So on the left-hand side, alternative program will be established. One more thing, so that there's no misunderstanding. So EM, those who are thinking of starting a new investment manager. So asset owners, maybe they lower, or you may think that they would lower the hurdle for decision making or investment. That's the reverse is true. Established firms with track record, they give more confidence. I mean, that's natural. So as institutional investor, that's how they think. So EMPs, we try to escort them, but there are things that we demand. And so if you get on this program, then you'll be funded. That's not how it works. You have to create a quality in terms of your organization, your execution, and we can work together to achieve that. And that is the direction we want to take you. Thank you. Hata-san, please. JIC has a strategy, and the strategy itself is evolving daily. So in the past, there were funds that came for funding, asking for funds, but we did not form a relationship. And those who were reluctant to come to us, because you might think that we have a very harsh view, but please come visit us, and also please read our website. So strategies and where we invest in them and the reasons for why invest in a particular manager. We disclose all that information. I think that can be very good clues or pointers to you. And what I want to convey to you is that the Japanese people are very diligent. So they prepare a deck, they have this PPM memorandum, and so now they're ready to visit the JIC. But you don't have to do all that preparation. That's not necessary in our communication with emerging managers. And in terms of how to start up funds, we have know-how about that. So come to us when you have a rough sketch, not when everything has been polished. Come to us, and then we can give you some advice. With this kind of organization, it's not stable. So after the fund has been launched, you should hire this kind of people. We can provide that kind of advice. We have experience of supporting the launch of Fund 1. And so top management vision and a strong commitment from the top management. Of course, we require that. But it's not possible to run a fund by just one person. So you have to have the team building capabilities, operation capabilities to run the fund. So objectively, we tell them what skills you are lacking. So you need this kind of number 2 person. So JIC can provide those suggestions to you. And we can go through the CVs together, and sometimes we provide that kind of hiring support as well. So JIC really stands with you to try, and look at us as a partner to start up an EMP program. So please feel free to come to us for consultation. So listening to the 3 people, collaborating amongst EMs is necessary, and also amongst LPs. That should be helpful. And the JIC said that they're providing consulting to the EMs, so that's also available. So the industry as a whole, we hope that we can enhance the level of communication amongst the various parties. Maybe in 10 years' time, Japanese EMs, I really hope that they will become world-class managers. So thank you very much for listening. I want to ask you to give a big round of applause to the 3 speakers. Thank you so much. Tsujimoto-san, moderator, and all the speakers, thank you so much for your contributions. Let's send them off with a big round of applause.